Hello everyone, and welcome to ICM's midday session. We have a quiet market today, nothing much happening on currency pairs, a bit of movement on indices, especially following Trump's criticism to the fiscal stimulus deal. So this is just what's moving a little bit on the stock markets. Also, on the other hand, let's not forget the new strain of COVID-19 and its possible implications on the economy. Still, we need to know a lot more about this strain in order to decide how it's going to impact the economy on the long run. So let's start with the technical analysis. For the euro dollar, we're still trading inside this channel that we highlighted yesterday. So nothing much happening, just trading in a narrow range today, awaiting some movers. Maybe it could be that today we're awaiting some news from the United States, among them initial jobless claims, which are awaited thoroughly by investors following their spike lately. Also, the PCE price index, which is the PCE index, which is also a very good gauge for for inflation in addition to the new home sales. So this is just the channel that we are trading in currently. You can see here the narrow range that was taking place earlier. We're trading near the 100 and 200 hour exponential moving average. So what you can do is just to trade any break below the channel. Possible targets, the first definitely is just possible support near almost 120, 120, 120, 130. And the next coming support is near 2060, 2040 areas. These could be the possible support zones for the euro dollar. While resistance, we need definitely to move above the 100 average, or at least clear above 122 in order to just retest the high of 2260. We are seeing lower highs in the past couple of trading hours, so this is just concerning a little bit. But also on the same side, we're seeing higher lows, so this is just signaling that the price is consolidating ahead of possible drivers. Moving to the British pound against the US dollar, nothing much also happening on the pair. It's just trading slightly higher today. There's a bit of optimism regarding Brexit, but still nothing clear regarding Brexit. So you can see here the range that we started trading in the week and how it's just narrowing again. So we had this possible range earlier, 130, 180, 135, 35 close of last week. And then the market started moving higher, and now we're having higher highs and lower highs too, consolidating in this area here. So definitely, in order to move higher, we need to just break above yesterday's high of 34.95. This just could be a positive sign for bulls and could drive prices higher towards 35.60 and again 36.20. While a break below this trend line, combining the previous bottoms, could just lead to big declines. The first one towards first level 133 and then 131.82 on a bigger scale. The dollar against the Japanese yen, also nothing much happening. You can see this consolidation, sideways move, still holding support line. So you can just draw trend line combining these. We could be possibly forming a head and shoulder formation here, but definitely we need to break below this trend line with a bigger volume. Coming possible support is near 102.86. While if we move back higher above 103.70, this just could open the door for another move higher. The dollar against the Swiss franc, so a bit of positivity for the pair. We're just seeing a little bit of consolidation in its higher part, but still on the bigger picture, we're still stuck inside this range. This highlight the 89.45 and 88.20. This is the bigger range that we are trading in, despite this selling rallies above 89, but this is just the bigger consolidation that we have to watch out for any breakout of. The Australian dollar against the US dollar, also trading inside inside this big range that started on Monday. So we're trading narrowly inside the range. You can see also higher highs and higher lows, just higher lows and lower highs. So we're just consolidating inside a certain area, awaiting break. So any movement back below 75.15 could just turn bearish again for the Australian dollar, while any move to the upside is just any move back above 70, 75, 80, or even 76 in order to just have a bit of more clarity that the negativity that happened earlier this week is just vanished, and then we could continue rising towards the previous top of 76.40. So this is just for the Australian dollar against the United States dollar. Moving to the New Zealand dollar, also similar formation, still the 70 level is holding. So this is just a key level to watch out for any break below. As long as we're above it, we're poised to further appreciation. A move above 71, 71.10 is just bullish again and open the way towards a rally towards 71.70. But on the bigger scale, we're trading inside the 170 pips range. The US dollar against the Canadian dollar, also similar formation, a rally to the dollar and then correction, another tryout to the upside, and then another correction here. So this is what's happening on the Canadian dollar. You can just highlight the smaller range and the bigger range. So you can just highlight the recent tops and bottoms, 29.60, 28.20. Also today we have the GDP from Canada, the monthly GDP. It could be a mover. A break back below the 100 and 200 hour exponential moving average or support of 128.20 could just lead to bigger declines and a drop towards 26.90. As long as we stay above it, definitely we need to clear back above 29.60 for another push higher. So this is for the dollar against the Canadian dollar. Moving to gold, it's still thin trading, nothing much happening. You can just continue to monitor this trend line that we are trading closely to it. So if you don't take the wick of the previous drop, you can see that we're stalling near this trend line. So watch out for any break below it on the bigger volume. 1820 is a key level. While in order to have a bit of optimism and a move to the upside on the outlook of gold, we definitely need to move back above 1875 first step and then 1884. Silver, similar formation to what gold is having, but consolidation is taking place between the 100 and 200 hour exponential moving average. So what you can do is just highlight the drop here or the support, which is almost near 24.90, 24.80. This area could be a key support area, and definitely monitor any break above the move with a bigger with a bigger volume. So you can see here these bottoms, the trend line combining these tops, was broken. However, we didn't see proper volume and we're seeing a bit of a rebound. So watch out for a move back below it. This could just turn a bit more bearish for silver. In order to be bullish again, we should trade above 26.10 as first step. WTI was weaker earlier on the day. However, we're seeing a bit of a correction here. Still the level almost near $46 is holding. Nothing much is changing in terms of fundamentals. You can just highlight any break back below 46. It just lead to a drop towards 45 and $44 a barrel, which were key supports previously, while a move above 48, 47.80 could just turn bullish again for oil, and we could be poised to retesting 49.40. As long as we're below the 100 and 200 hour exponential moving average, we could see another leg lower. Moving to the Dow Jones, which is raising losses. So here the market dropped yesterday sharply as Trump criticized stimulus bill, and then the market recovered all these losses. You can see how the market is trading sideways, and it's obvious from the movement of the 100 and 200 hour exponential moving average. They're coinciding. This just signals that we're just trading inside the same area for a while. So you can just highlight the bottoms. You can see how the market rebounded exactly from this bottom 1, 2, and 3. You can also add another minor support near the bottoms. That could be possible targets on a sell-off, while any move back above the moving averages could just lead to a rally towards the previous top of 30,355. This is all for today's session. I'd just like to remind you that all the information, news, analysis, and opinions mentioned, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. We wish you safe trading and thank you for watching.